Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the dollar versus Canada, try to make sense of the technicals in what is a up and down market for that currency pair. So let's get started. I think the best view of this chart is from the 4-hour chart. And if you take a look at it and you focus on this yellow area right through here, this yellow area was home to a number of different highs, outline some of them right through here, where the price came up and formed this ceiling here, moved down, moved down, moved down. We broke above that ceiling here, moved higher, then tried to hold support against the old ceiling, which became the floor, but that wasn't able to happen. And since then, we've seen the ceiling reestablish, including in trading this week. Again, this is a 4-hour chart, so this is Monday's highs, and we've since it rotated back to the downside. So we know that ceiling exists between the 135.26 and 135.42. In between that is the 50% midpoint of the move down from the September or October high down to the low prices that we saw right through here before moving to the upside. So I think we can all agree that that ceiling exists, and if the price is going to go higher, we need to get above that ceiling, and also, by the way, above the 100-day moving average right here, which is moving its way down toward the high of that ceiling. So that's the directional, that's the resistance on the top side. Now, on the downside, the support has been a little less agreeable, I guess. We fell below the 200 bar moving average on the 4-hour chart here. We dipped below it here, but let's call it a successful test there. So we moved off of that level and moved higher. That 200 bar moving average is moving higher, and it would be then a target on the downside to get to and through. Also, the 100-day moving average, that's this green line right here, is in play. I'll just circle the two 200 bar moving averages. But as you can see, really over the last few weeks, the price has had its way above and below that 200-day moving average. Not really paid a lot of attention to it. It's moving sideways, which is indicative of a non-trending market, and that's the fakes above and below that moving average is indicative of a non-trending market as well. So, but nevertheless, we do have to pay attention to each of those moving averages and use them as our defining points for more bearish or more bullish. So we do need to get below the 200-day moving average. We do need to get below the 200-bar moving average on the 4-hour chart. And then we'll look at the try to look at the 38.2% retracement, the broken 38.2% retracement of that longer-term trend to the downside that can't cause this, and now we turn back up there. So that's a technical story for the dollar versus Canada. Admittedly, it's a little messy, but we do have a key resistance at the top side defined right through here, and we have some levels on the downside that we can pay attention to hopefully give us those clues as when the market breaks. And then we look for momentum in the direction of the break and cross our fingers and hope to die, or hope to see further momentum in those directions and get out of this rut that we're in. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.